Hey folks, and welcome to the Pipnotic Symposium on the 20th of July 2025. Alrighty, so I just want to show a few updates. I've been really busy these past few weeks and built loads and loads of stuff. 4 new dashboards: Commitment of Traders, the Simulator, the Strategy Tester, and the Insider Trading dashboard. I'll just kind of walk through these one by one without spending too much time on them. But if we take a look at this one, the COT data. So this is downloaded every week. And it's put in a chart rather than a table like this, where you can see the different assets here, the different futures or the different markets, and you kind of click through those, and you can kind of see what's there, whatever. And if you're interested in knowing a little bit about the Kiwi dollar, you can simply click on it, and this results in the table at the bottom becoming populated with the data that's relevant to the Kiwi dollar. Okay, and here you can see just the development between the commercials and the non-commercials over time. Okay. I'm going to have to make an in-depth video about how to use this tool, but I just want to show you that now it's there, and it's really, really powerful. And the reason it's powerful is because the way the data is presented, and it might look really confusing, and sometimes it is confusing, but you just have to focus on, let's start with gold. You just have to focus on what data is being shown to us. Okay, now it's a bit of a debate where the quote-unquote smart money is, or who they are, but essentially the non-commercial traders, they're the people who are buying and selling in these futures markets to earn money, to make a profit, in contrast to the commercials. And these are the people, the institutions, the organizations who are trying to offset risk. And so their motivation to buy or to sell is heavily based on their desire to prevent price fluctuations from causing a loss on their books. Okay, so if you pay attention to the non-commercials, at least for the speculative markets like gold and whatnot, then I think you'll be in pretty good shape. But what you want to do here is you want to focus on the difference between the the longs and the shorts, which is here. And you can see how, we were very, very net long, and then it slowly started to slow down. We went from 300 to under 200, okay, and now we're slowly starting to build up again. And so, what that means is that we were very, very bullish. We took some profits, and now we're looking to move higher again. And so this whole period from around maybe here to here, this is likely profit taking. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 2.5 weeks. This pullback here is about 2.5 weeks. If you look at the gold price chart, it did that. We had a bit of a pullback. And now it looks like that we're accumulating larger long positions relative to the short positions. So we can expect this to begin to happen. Holy shit, let me let that bee out. He's a big fella. Alrighty, the bee is gone. Okay, and so, yeah, this is just telling us that maybe they're beginning to accumulate these longer positions in anticipation of higher gold prices, which I think makes perfect sense. Okay, so check that out. Here you can see the percent long, the percent short, the total contracts. Okay, and you see the percentage of them that are long, short, and then the number of contracts just here. Okay, so that was the COT dashboard. Let's go back here, excuse me, and have a look at what else we have. And so I'm just going to do the simulator very quickly, because I think most of you have already had the opportunity to fiddle with it. This is a really awesome tool because it enables you to kind of pencil out a framework when designing trading strategies. And your trading strategy can be based on supply and demand, or maybe if you don't trade supply and demand, maybe you're a momentum trader and you're looking to trade moving average crossovers, or you like to focus on Elliott waves or Gartley patterns, whatever. It doesn't matter. But what does matter is that this simulator here enables you to identify key metrics and test them over a large sample size, the law of large numbers, and with some start capital, a bit of leverage, number of periods, so that we get these these metrics correct. And then essentially you can just run the simulation and it goes very, very quick. And it just enables you to kind of see if that model with these parameters is profitable. So let's assume for a second, I know I've done this 100 times. I'll do it one last time before I do something else. Let's say we're winning 40% of the trades, okay? And we have a risk reward of 2.6, which means an R ratio rather, which means for every $1 we risk, we are attempting to gain $2.6, okay? And we are risking 0.1% per trade. Our sample size is 300 trades, which is small. Let's do 1,000 trades. Our start capital, let's say we have $1,000, even let's say $100. Okay, leverage, periods. What does the periods mean? I haven't explained this. I put something in the chat the other day about what that meant. But what that means is the periods parameter is relative to expected annual returns. So if we have a strategy and we have expected annual returns of, let's say, 15%, roughly what the S&P does over the course of a year, we need to know how many trading periods there are in that year, in the calendar year. And so if you're trading on a daily chart, well, then that's not going to be a lot. That's going to be like 252. Okay, so we're assuming here that this is a daily trading strategy. But if you're trading on the hourly chart, it's going to be different. And I'm just going to show you really quickly. Okay, so if we have, let's say that you're trading 24 hours a day. Let's assume for a moment that we are looking at hourly data, which is what we have in the back tester, in the strategies tester. We're trading 24 hours a day. So we have an automated trading system that is in and out of the market 24 hours a day. And we're trading 365 days a year, which is not going to happen because the markets are closed on weekends and holidays. This will give us a grand total of 8760. Okay, but that's not entirely true, is it? So let's assume now that, let's look at the ASR, which is an automated trading strategy. It trades the Asian session, the European session, and the North American session, which gives us about 16 hours of market time a day. And we're doing that for 252 days a year. Okay, so this times this is the number of periods, which gives us 4,032 hours. Okay, so this value here is dependent on how often your strategy is interacting with the market. If you're trading on an hourly chart, then this should be greater, 4,032. Okay, if we go back to the chart here, you can see it's 4,032 hours per year. Okay, and so the algo now has a way to calculate all of this stuff. Okay, so we'll leave it on that. So essentially, maybe I'll put a drop-down box so that you guys don't have to calculate this stuff yourself. But if you're trading on the daily chart, like I know, for example, Andrew does, then you would put this on 252. And this value is crucial when calculating like Kalmar ratio and profit factors and stuff like that. And so it's pretty important to get right if you want these values here to be correct, or at least the Kalmar ratio. Okay, so it's super important. But let's assume we're doing on the hourly chart, which is what the ASR is doing, among others. Okay, and our target profit is 12% a year. Let's put it on about 16% a year. We're hoping we get at least 16% a year. Okay, and then we have $100. We start with risking 40%. The R ratio is 2.6. We're risking 0.1%. Sample size of 1,000 trades, and then you just hit go or run simulation, and this starts crunching, and then it gives us some information about this simulation. Okay, so we had $100 we started off with. The end result is 7,700. So total return of 7,600%, which is really good. Max drawdown 18, that's manageable. Win rate is 40%. This is what we put up in here. Number of wins is 403. Losers is 597. And this is the max winning trades. So how many trades won in a row? 7. How many trades lost in a row? 12. Oh, that's a lot. The average winner to loser, 2.97, which is greater than our R ratio, which is great. Sharp ratio, 16.2. The profit factor is 2.0, and Kalmar ratio is really low. So this is because this number is quite large. So if we reduce this to, let's say, 252, which is a day trade, then this value will probably increase a little bit. Yeah, just a little bit. Okay, but we still had similar returns. Okay, we had you see how it affected the Kalmar ratio? That's because this has to be correct. This is super important. Okay, and here you can see kind of the returns over that 1,000 trade sample size. Okay, so take this, use it, enjoy it. It's a really fun tool to play around with, and I encourage you to get comfortable using it. Okay, and then we have the newest edition, which is the strategies tester. And I finished this. Actually, there was a bug in this that I fixed yesterday, but this is based on the actual code of the ASR. But it is using synthetic data, which means that I'm calculating the data randomly. So I'm generating this data essentially randomly, where I'm using essentially like chaos theory. This is chaos theory, where you have a series of events, and the series of events are very much dependent on the initial conditions of the series of events. So the first event in that series of random events. This is essentially what I'm using and how I'm calculating this random data. But despite the fact that I'm using random numbers to generate random asset prices, when I click on this button in just a second and I show the data, I mean, you'll fall off your chair because it looks so much like real price data. It's actually really crazy. Okay, so I'm just going to run through these configuration settings. So we have initial capital. Let's say we have $1,000. We're risking 1% per trade. Our stop multiplier is 1. Our target multiplier is 3. So the R ratio for this would be 3. Okay, we have, there's some code that it's dependent on the presence of price relative to a moving average. And it is 50 periods. ATR, standard 14 periods, which I use to measure volatility. And this is an ATR multiplier. This is 1.5. Z-score multiplier, which I just set to 1. And then these two settings probably won't make sense, and I could spend an afternoon explaining what they do. But what they're doing essentially is they are establishing an envelope, a moving envelope or a moving array of extreme values in volatility. And I am looking at the very, very top. So I'm sorting them, all of these values of volatility, and I'm looking at the very top percentage of that. And so I want the volatility of the price movements to be at least greater than the top 11% of all of the data points. So we're looking at extreme values. Number of bars for the simulation, we're going to use 3,000. We have transaction fees. We're looking at 0.5%. Okay, so remember this is in decimal point. So this is 1% here. Oops. This is 1%, 10%, 1%, and this is half of 1%. Okay, so all of the numbers are decimal numbers. And then we have price volatility. If this is set to, for example, 1, then prices will exhibit less volatile price movements. But if you put this to about 2, which is a default, then you're going to see like pretty normal price volatility that you would normally experience during a trading day. And this is just because, prices are normally volatile. And I'm also ensuring that we have something called volatility clustering, which ensures that periods of volatility cluster together, which is what asset price is doing. You don't have the ATR going from like period -3 the value of that being 100, and then minus 2, which is the next one, it goes to 3, and then Pierce minus 1, it goes to 1,000. It doesn't do that. It doesn't go from nothing to up here to nothing to another value that's crazy like that. It's always moving like this, and then prices get volatile, then they slow down. And so what the algo does, it's looking for volatility to cluster. Okay, and you can see this, and you may have seen that in the other dashboard that I have that I wrote in Python, which only ran on my computer, where it would give a reading. And I think if volatility clustering is over 0.7, then it's considered valid asset price quality. And so this is what I'm doing. I'm trying to scrutinize the data. Anyway, we hit this. It runs. It's doing a lot. It's running a lot of code, so it's a little slow. So be patient. And here you can see the saved parameters. Here you can see the data. So if you look at this, this is pretty cool. This is like, this is the data that was actually generated, which I think is pretty remarkable. It looks pretty good. You know, here you see like you have demand. Prices go up, they test the bottom, it goes up, we go above this top here, prices come down, resistance becomes support, and this is all random, which I think is completely bonkers. Okay, and then we have that, and then we have, this is what it looked like. So we went from $1,000 to 634. And here you can see the win rate was 20%. The average winner to loser was 2.94, but this is too low. Okay, and so what I like to do is I like to find a simulation where we have something that, if we have a risk to reward, an R ratio that is 1, then you want it to be like this. This is good. Okay, so we have 33%. This is great. And so this is essentially telling us that we have the model, the ASR model, based on this data, is profitable, very profitable actually. I mean, we have a CalMAR ratio of 4.85, which is really good. We have a Sharpe ratio that's 2.25. That's very, very good. The profit factor, so the average winner to loser is this, which is also decent. Okay, so we want to see at least something like that. If you want to download the data, this is the price data, and if you want to download the results, it's here. And if you want to download the statistics, which is this here, then you can do that by clicking on the links just here below. And so what you do is then you slowly begin to fiddle with these parameters. And I've had lots and lots of time to do this, and I have a pretty good idea of what creates returns, good returns. And you can see this is hourly data. So if you look at this, you can see all of these, they're on. Yeah, so you can see each of these, this goes from the 17th. We're not showing every price point because there's quite a few. We can't get them all on here, but you can see here's the 17th, the 14th, the 11th. So this is hourly data. It's kind of scrunched up, but we can also put more price points on there, or bars. Just because there's 5,000 bars, it doesn't mean that there are going to be 5,000 trades, which there won't be. Here we had 216. It's because sometimes there's data, but there's no signals in the data, so the algo will just pass and just wait. But if we do that one more time, just to have a larger sample size, and when you trade a model that is based on like a probabilistic model, statistically probable model, well, then you need a lot of trades in order to assess the quality of it. And here we had, how many do we have? We have 5,000 trades, or rather 5,000 bars, which resulted in 359 signals. We had 111 winners, 243 losers. We had a win rate of 32%. R ratio, so the average winner to loser was 2.5 times greater, which is great. And at the end of the simulation, we had a floating P&L of $22. Okay, so this looks reasonable. And so if you ran this over 100,000 periods, I mean, this would just continue to wriggle higher. And so I encourage you to use this and to fiddle with this and find a configuration that consistently delivers profits no matter the data that it's using here, because this is random. Again, this is random price data. It's random. If I can get this. This is all random stuff, which I think is kind of funky. Okay, so have a look. And what I'm doing is I'm making an addition to this where instead of there being this data being generated randomly, I will on a daily basis upload and update Bitcoin, gold, silver, Euro USD, the cable, the Loonie, all of the other ones, and I'll have those, and they'll be available to test the data on here. And I'll put tons of different assets in there so that you can select those instead of using random data like this. And then it'll give you the ability to run the ASR with different configurations on very specific data that is not always changing. Because essentially, if the data is moving, then it's kind of like we're moving the goalposts all the time, which can be quite difficult. Okay, but this is just a back tester on random data for the time being, and as I continue to move forward, it'll get better and better and better. Alrighty, so that was that. If we go back to here now, we have another dashboard, which is a fourth one, which is insider trading. Sorry, before I get onto this, I'm currently in the process of designing the architecture for the different strategies, the ASR and the buy and sell zones, and they are going to run via the web browser, and the signals will be presented in the table, similar to the way that they are today, but better. But it's going to be harnessing deep learning, where I'll have like 100,000 trades with the entries, the stop loss, the targets, all of the parameters, the risk to reward, all of those things will be in there, and I'm going to feed that I'm going to use that data to build a model. And so that each time the algo finds a signal, it sees how good that signal is. And so it'll use that model to assess the values of that signal and say, yes, this is a good signal or this is a bad signal. And the cool thing about that is if the model returns this is a really good signal, well, then you can use full risk. Then we're risking like 1% per trade or 1.5% if it's a good one. But if it's like a mediocre signal, let's say it's maybe 50%, something like that, instead of 70%, which is a good signal, well, then maybe we use like 1/4 or 0.5%. But this is something that I'm still kind of designing in my head. But that'll be really, really awesome. And essentially what will happen then is that all of this, we will be able to move away from MT4, and we will be able to move everything into the browser. And if we have developers who want to program their own signals or their own execution, rather, if you want to use these signals but execute them on a different platform, then you can do that via an API that I'll build, which is kind of cool. So this is also coming for here, and also buy and sell zones as well. But there's a lot of work to do. Anyway, so we have the insider trading dashboard, which is the most recent addition. And this is pretty cool. The first page is the instructions. The instructions just talk about what SEC insider trading data is. Oh, that's done 2 times. I have to fix that. Explains what it is, what the data that is available in the reports is, and what it means, how it can be used for speculative purposes. A little bit of practical information if you're momentum trading, if you're a contrarian plays, you can use this information for this. A little about the caveats and the risk. And a few other things here that might be quite useful. And a note at the bottom of this is development, so I'm constantly developing it. But what we can do, there's going to be nothing here in the daily because today the markets are closed. Error, there is no data for your source file. I have to make this prettier, so to get like a message that says there is no data. And the weekly, this is for last week. The cool thing about this is that we can see that that this asset, which has no ticker name, someone bought $123 million of it. And that's a lot. So we want to know what that is. So we go here, you can click on that link, and it'll take you to the SEC filing. And in here, you don't have to read this. This is just for reference, because all this stuff is available in the reports. But you can see that that Dan A. Joy, he bought an additional 139 shares at the price of $20. Okay, and now he has a grand total of 166,857 shares of this company. And the reason it says none is because, we don't know what the symbol is. It doesn't have a symbol. So what this is probably telling us is that this is within the company, they're just moving equity around. And so this guy was given more equity in the company because maybe he was promoted, and so he got a little bit more shares in the company. So sometimes you'll get this. It'll say none or unknown. But in other situations, like here, CRSP, which we have transactions for $51,499,918. If you go here, you can see that this is a ticker name, and the company's name is CRISPR Therapeutics AG. Isn't that from Switzerland? Maybe? No, actually these are American companies only. And then here you can see a little bit about the transaction. So he bought 6,510 shares at about $52 per share, which gives us the value that we saw there. So you take this value, multiply it by this value, and that gives us like a value of the whole transaction. And there's a lot of other information in here that you may or may not want to look at. But essentially what we can see is someone bought a boatload of these shares. And this is really nice information to have access to. Okay, so when you come in here during the day, this is empty because it's Sunday today and nothing's going on. But on Monday morning, when the United States office hours opens, the tables in here will start to populate, as will the weekly, because on Monday it'll look like this because there's nothing for the current week. But you can always go to the monthly and you can see what's going on there. And here you can see something quite similar. You can see that means someone's selling a ton of Amazon. So if we go to the bottom of the list, press this button here, go to the bottom, I bet you that's Bezos. And we don't have that filing information. If we just find this one here where we have Dell. So someone is selling a ton of Dell. So if you go here, you see, here's a ticker name, Dell Technologies, SLTVA. I'm not exactly sure who this looks like. Maybe a holding company. They're selling a lot of these shares. You go to the reporting owner section. Sorry, here it is. And you can see, here it is, the non-derivative table. And you can see here that this is the number of shares that were sold. Where's the price? I can't see where the price is. Oh, it's difficult. I can't see. I can't spot where it is. But this is how many shares were sold. And this is a Form 4, which means it's like either a buy or either a P or an S, which stands for purchase or sell. And you'll see a P or an S somewhere in here. I can't remember where it is. I got code to read all this this crazy stuff. Anyway, it's in here somewhere. But here you can see a little bit about the people or the person who sold all of this stock. Okay, so you can see that Mobley, MBLY, has sold Dell, and all of these companies. There are a lot of people selling. So we go from positive winner 123 million down to minus $1.7 billion. So someone is selling a ton of Amazon stock. Okay, and this table here is going to show for the year. This is going to be for the whole year, and I only have recent data because it's still populating the database. This is for the current month, current week, and the current day. Okay, so if you want bleeding edge info, stay on this. Put your page to refresh every minute. When you start to see green boxes like this tick in, and you can use this as a signal to begin to consider to purchase this stock, if this is what you want to do. But you can look at the details here to get more inspiration as to what you can do here. Okay. Alrighty. What else? And that's about it. Everything's been moved around a little bit because I'm kind of just moving more and more stuff in here all the time. We have the dashboards, of course, still. These have been changed a little bit. But they're still in there. And here we have the dashboards. 20th, yeah, they're still running. And we have all of the algos in here. Yeah, slowly creeping up. I think someone took someone withdrawed some cash in the buy and sell zones in one of their accounts. And so there's a big drop in here, I think. Yeah, someone withdrew. We went from 6.145 to 8.571. Someone took some money, or some people took a bunch of money out of their accounts at around the same time or on the same day. So it looks like it doesn't mean that the robot lost. It means that people are just withdrawing money. Yeah, so pretty exciting stuff. But anyway, I've been rambling now for 31 minutes, so I'm going to stop. But if you have any questions, please do let me know. And thanks once again for watching.